Think Realty Nation, it's Abhi Golhar, your host of the Think Realty Podcast. We're trying something new on the podcast today. We have a really busy lender. He's based out in the Northeast, and we're going to see if we can kind of get him. I have my producer, Matthew, who will be working to send him all the links and all of this stuff, and if he's around, we'll just try calling him and seeing if he picks up. He's always on the move. If there's one thing that I know about this individual, he lends a lot of money. He's always on the move. He's always doing deals. And I have a feeling we're probably going to catch him in the car. So we're going to give that a shot. In the meantime, let's go ahead and rock and roll with some market updates, some news, and then we will see if we can go ahead and get him on the air and on the line here in just a second. All right, so before anything, this podcast is brought to you by Renters Warehouse, one of the largest, fastest growing, and highest reviewed property management companies in America. Check them out. Go to renterswarehouse.com. So the March Zillow real estate market report is suggesting that the total pool of for sale inventory is starting to increase. The number of new listings on the housing market has fallen year over year in each of the past 4 months. And this is according to this report. And it concludes that inventory growth is fueled, of course, by cooling demand and not an increased number of sellers. Kind of interesting because I always thought that there was a major demand, a lot of demand for housing by millennials because they are looking at buying in droves. Is that the case or is that not the case? I don't know. Let's see. Overall inventory in the U.S. is 1.2% higher than in March of 2018, but new listings fell by 6.1% over the same period. And homes that are staying on the market for a little longer. And I'm interested to kind of see where this is happening and what price points as well. The median time on the market increased 4 days in February from a year prior, and this is the first such increase in about 4 years and the largest increase since 2011. So just kind of keep that in the back of your mind as you're looking at property and making that next offer. All right, so we're going to go ahead and try to bring Jeff Levin on this little video podcast thing that we've got going on, and looking at Matthew, and hopefully we'll be able to get him. All right, so we're going to go ahead and see if we can get my good friend Jeff Levin on the air. And I feel like I keep saying on the air because I'm still used to always saying radio in Radio Land. And Matthew, we tried calling him. I know it's a Zoom link and it's kind of a little crazy, but did we get him? He answered. No way. Jeff, can you hear me? Can you see me?
Abhi.
Hey, all right.
Good to see you, my friend.
I love it when the first thing that I hear out after your voice is like an ambulance.
If you knew where I was. So I'm actually, you caught me.
Yeah.
I am, there is in fact an ambulance driving by. Let's wait till this calms down. Ambulance is passing.
Dude,
I'm actually out doing inspections right now. I'm glad you caught me, and I'm glad we are able to make some time to speak to each other.
No, I figured because you were going to be my surprise. This is the surprise, and I'm like, I did my entire spiel in the beginning, and we did some market stuff, and I'm like, all right, I need to see if I can get Jeff on the phone or on the Zoom thing, video thing, because I know you're always running around, you're always doing deals. So what are you doing right now? And then we'll get into who you are and what you do in a second. But what are you doing right now?
So one of the themes that I really want to focus in on is teamwork. So where I am right now is at a building that I own. I call it the Yellow House. And once you see the building, you'll know that it is in fact yellow.
Oh, wow.
This is a 6-unit apartment building that I bought that we presently do Airbnb, where I am literally 5 blocks from the U.S. Capitol. And the reason why I wanted to bring up teamwork with you, Abhi, is last night we were doing some drywall repair. We have a God, that was my phone.
Hey, it happens. No worries. So you're doing some drywall repair.
So we were doing some drywall because we have a very special guest staying with us tonight. We have the founder, one of the founders of Priceline, actually staying at our Airbnb right here. So
wow. Okay.
The reason why I bring up teamwork is we were doing some touch-up, a little bit of drywall, and the drywall guy goes into the drywall, and all of a sudden, our sprinkler system went off and we had a flood.
Oh, no.
Literally the day before this very special guest is coming to stay at our house. I'm hoping he gives us a good review.
Right.
And so the value of teamwork. This happened yesterday at 5 p.m. We were fully mobilized by 6 p.m. with the restoration crew and people, and we still have the fans outside.
Wow.
They did do a bit of damage to the building, but but as every investor should know, the value of insurance is very important. That you're properly insured on each one of your buildings or flips.
That's right. So let's finally get to who you are and what you do. I'm still floored that I got you. So, Jeff, who are you? What's your company? What do you all do? You have an Airbnb, the 6-unit Airbnb, obviously, and you do a lot of lending in the Northeast. Can you talk to me a little bit about your background and then, of course, what your company does?
Yeah, of course I can. So we've known each other for quite some time, and in fact, shared a special time over the pond in Shanghai.
Yep.
So for those who don't know me, my name is Jeff Levin. I'm the founder and president of Specialty Lending Group. We are a direct hard money / private lender. I am also the author of The Insider's Guide to Private Lending, where I talk about stories and really teach people about private lending. And when I started private lending, I didn't have a guide. I didn't have a Sherpa. Nobody told me the ins and the outs.
Right.
And I learned a lot of it from the school of either hard knocks or experience.
Yeah.
I'm also a real estate investor. I would call myself kind of a small developer. I primarily partner up with people in the DC region. We're developing right now 9 condos, and we have a partner also that does a multifamily, and we're under contract for about 55 units. And I like to teach people, and I like people to benefit from the experience that my life has provided me.
So you mentioned you've written the book, The Insider's Guide to Private Lending, and we're actually giving away 5 copies of the book right now. So if you want to enter to win one of the copies, you can text the word lending. Okay, so you want to text the word lending to 68683. So Jeff, what was your inspiration for writing the book? Because you, as you mentioned, I mean, you're kind of a small developer, real estate investor, and more specifically a lender. You JV, you joint venture with borrowers and other partners of yours in the area, in the DC area. What was your inspiration for writing the book? Was it just because you saw a need for it? Was there stuff that you were finding that people were doing right? What gives?
A little of both. You know, as I had previously mentioned, when I came into the field of private lending, and I've been in finance and real estate for my entire career, nobody told me what to do. Nobody said, make a loan to this guy. Nobody said, don't make a loan to this guy. Don't make owner-occupied loans. Do make owner-occupied loans. Make investor loans. And I wanted people to have somebody like me teach them and tell them the benefits of private lending. I do believe that private lending should be a part of any well-balanced real estate and investment portfolio. Even if you own real estate, lending provides a lot of benefits to people who want to have their cash fairly liquid. In the stock market, as we've seen, we're having a great time in the stock market for those stock investors. We're at an all-time high. The question is when does the party end? If you're looking for a fixed income investment that provides safe and consistent returns, private lending is something that I wanted to tell them about.
I think that's a really smart play. I mean, we take a look at investing single-family rentals. You've got the Airbnb properties, right? Your 6-unit that you're standing in front of right now, the yellow house or the yellow building. I feel like private lending is a really smart play because you're not operating the deal. Right? You are vetting somebody else who's an operator. You're vetting the asset. You're making a loan at a certain percentage against the asset, and you're taking a calculated risk on the operator who says that they're going to do the deal and do it successfully. Sometimes it works, sometimes it doesn't. Sometimes you can JV with them, sometimes you don't want to. So having this lending component as part of an overall as part of your overall real estate investing strategy, it really helps to round it out properly, right? I feel like you can't only flip and get away with it. You can't only rent, you can't only buy single family rentals and get away with it. You can't only do multifamily and get away with it. You need a varied exposure to the marketplace, which is what you've done very successfully. In your book, The Insider's Guide to Private Lending, what are some of the topics that you talk about that you really bring to the forefront of saying, hey, here's how you want to structure yourself in becoming a private lender, and how do you do it successfully?
Well, I talk a little bit, I don't talk so much about structure, but when you want to be a private lender, you need to really do it through an LLC. You do not want to loan people. Number one, you don't want to loan people money individually in your own name. And furthermore, you don't want to lend to individuals. Lending to individuals is a big black hole with lots of different regulation that varies state by state, and a lot of federal regulation with disclosures. And it's generally, there are a lot more owner-occupied loans, but they're a pain in the behind, and that's how you structure. But some of the themes I cover, I talk about really the 4 C's, and some people call it the 5 C's. Number one is credit. In today's day and age, you need to know who you're lending to. A lot of developers got hurt in the Great Recession, and there's some developers that simply don't have great credit or great assets. That does not mean that they are bad borrowers or borrowers that are not worthy of a loan. So it's important, even if somebody filed a bankruptcy, that might be 7 years ago, and the community banks may say no. That actually may make a lot of sense to me. Yeah. The second is capacity. Like this building is a 6-unit building, and I was able to hire a developer to really turn this property from what it is now, when you can even walk through the front door and get to the top floor, when we bought it.
Oh man!
Capacity. So really, the theme is capacity. So does the developer who's doing a 6-unit, does he have the capacity to do a 50-unit? Yeah. So you need to know if they have the capacity, not just to complete the project, but also to make the monthly payments.
Yeah, and here I thought the 5 C's you were talking about were color, cut, clarity, carat, something along these lines, right? Like now you're talking about capacity. Like that's not part of the overall equation, Jeff.
I mean, if I was in Cleveland, I might say the Cavaliers.
Right, but you're not in Cleveland. If you're in Chicago, you'd say the Cubs. I mean, I understand what you're. I got you.
If I was in Chicago, I'd say deep dish pizza, but that doesn't start with a C. But you and I have had that conversation before.
Yeah, that's right.
So the next is the next two are really the most important.
Yeah.
Number one is character. You want to know the character of your borrower. You want to meet your borrower, ideally in person, look them in the eye, find out what experience they've had, and find out what they stand for. And that's not just about making money, because everybody wants to make money, but it's getting into bed with the right people. And the last and probably the most important is collateral. What is the collateral you're actually lending against? Is it a building like this, right? Or is it a building that might be in disrepair somewhere along this street? So those are the 4 themes that I cover, and I tell my stories through a narrative of why did I make a borrower a loan who was on the verge of bankruptcy. And this is by far the most successful loan I've ever made. I turned this borrower's, he turned his life around, but I helped turn his financial life around. And loaned him some money at the height of the Great Recession to have him buy have him pay off the bank that he owed some money to. He did that successfully. He walked away whole, didn't have to file bankruptcy. And he came to me with another deal, and he said, Jeff, I'm buying this. I forget whether it's a 15 or a 16 unit. I detail it in my book. But he added additional units. He said, Jeff, I'm going to buy this building. I'm going to add these units, and I'm going to get the VA to lease the building. And I'm going to do all of this within 6 months. He was not adding any square feet, any square footage. He was simply reconfiguring units. At the end of 6 months, he called me, said, and obviously we were doing inspections, and I covered that in the book as well. Said, Jeff, not only am I refinancing the building, I'm pulling all the money that I put in out, and I have a $10,000 a month positive cash flow after my mortgage payment, and the building I have $1 million of equity in the building. A truly incredible story. I actually saw him about a month ago, and he said, Jeff, and he's graduated to bank financing and really has got himself in a good financial position. Said, Jeff, by the way, I pulled another $1 million out of the building. So this is a guy
That's nuts.
Whose wife told him, this is a guy whose wife wanted to throw him out of the house, and now is a multimillionaire as a result of private lending.
It's funny to me how the stories of investors' lives can change when they work with the right lender. And sometimes,
So important.
and sometimes they don't change for the right direction. If you work with the wrong lender, you can find yourself in a deeper hole than when you started. If you work with the right lender, like yourself, Jeff, you really have the opportunity to scale and grow and become the person you always envisioned yourself to be. And just because you don't have a whole lot of money now doesn't necessarily mean that you can't put a good plan together. You find the right collateral, the right team, the right lender like you to create your dreams. And you really build that into your overall life plan, and you can partner with Jeff, and you start executing on things step by step, and it really works out. So you've written this book, The Insider's Guide, to Private Lending. If you want a copy of the book, there are 5 copies that Jeff is giving away. So to enter and to possibly win, you want to text the word lending to 68683. And Jeff, we only have a few more minutes before we kind of have to wrap up our conversation. If I'm a new investor, similar to the story similar to the individual of the story you just told, what do I need to be paying attention to? What do I need to be doing? Do I need to move to the greater DC, Baltimore area to work with you? How do I make this shift happen?
Good question. And I think it goes back to your previous comments, is you are who you associate with. Yep. So you need to, number one, associate with people that have similar interests. We are currently lending in the DC metro area. We will fund projects that are greater than $1 million outside of the DC area, but with a very light, if no construction component, more like a bridge loan. And we do that quite well in the $1 to $5 million range, and potentially more, but that's later.
Yeah.
So what does the investor need to do? Number one, read a lot. Okay?
Yes,
know what's going on know what's going on, and listen to people like you. And this isn't a pat on the back, but you need to be in tune to what's happening in your local market. And people at Think Realty, if you're interested in being a flipper, have invaluable data, not just on one market, but on every market.
Yep.
Number two is, if you're new to it, find a mentor. Don't try to recreate the wheel. That's, again, one of my motivations for writing the book. And those are the first, and make sure you're capitalized, because you can start out being not a flipper, a wholesaler.
Yeah.
And that's the way a lot of people have done it.
Yeah.
There are projects that I've wholesaled that I haven't had the desire or capacity to do. And those are really the 3 things.
Awesome.
A number of things
that's
a new investor should do.
Super, super helpful. We have to close out. I certainly appreciate your time. I know you're busy. You have this potential flood thing going on, so I appreciate you picking up for me. If I want to get in touch and just apply, say, to work with you and your finance team, et cetera, what's the website that I can go to?
We've also started doing some mentoring too, but the name of the company is Specialty Lending Group. And our website is a bit complicated, and I think every time about changing it from a .com to a .team, but it is spec at Jeff, Jeff, at spec, SPEC, lend, LEND, group.com. Jeff at speclendergroup.com.
Awesome.
And the best number to get me is 240-372-1556, 240-372-1556. One last thing, Abhi, I do have a separate website that is Jeff Levin Lens, JEFFLEVIN Lens my name is pronounced Levine with that invisible E that we somehow lost in Nellis Island.
Well, hey, Jeff, thanks so much for your time. I'll let you get back to your project. I know your hands are full, but I really appreciated the time. It was a lot of fun.
Likewise. Take care. Have a good week.
You too.
Take
Thank
care,
you.
Abhi.
Yep. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit turnkeyrealestateinvestments.com to learn more. All right, interesting topic today to talk about the most and least affordable housing markets in the U.S. for average people to buy in. What do you think the most affordable housing markets are? Atlanta, maybe? No, dead wrong. Detroit, Cleveland, Ohio. So the average Joe and Janes, where should they look? You got a drum roll? I don't know. We got to build in like some type of drum roll at some point in time, but we will. And Bibb County, which is home to the city of Macon, Georgia, is a good place to start. This county is about an hour and a half hours south of Atlanta and has a median home price about $141,000. And this is as of February 1st of this year. Next up, we've got Baltimore, Maryland at $265. Wayne County, Michigan, home to Detroit, Michigan, clocking at about $115,000. Rock Island County, Illinois, at $121,125. And then Montgomery County, Alabama, at $165,000. Alabama is a very interesting state. You're finding a lot of good single-family rentals, duplexes, tries in Alabama as well. The same thing with Chattanooga, Tennessee, and Greenville, South Carolina. So just start checking out some of these southeastern markets. I think you'll kind of find a win. All right, the least affordable housing markets. What do you think those are? Kings County, New York, also known as Brooklyn. I've been to Brooklyn a couple of times, and yeah, it's crazy expensive. It's nuts. The median home price in Brooklyn, a whopping $849,000. I mean, all right, I must say, the brownstones, okay, I'm drooling over these brownstones in Brooklyn. You cannot get better than that, for sure. Unless maybe you go to St. Louis, and then you can buy something for a little less. But no, Brooklyn, New York. And then Manhattan, New York wasn't too far behind. Median price there is nearly double that of Brooklyn at $1.65 million. Followed by beachy Santa Cruz, Santa Monica. That's not right. Santa Cruz, Santa Monica. I'll just say followed by. All right. Manhattan was followed by beachy Santa Cruz, California, and Santa Cruz is just south of San Francisco, and Silicon Valley coming in after that, roughly about $899,500, and Marin County, California, just north of San Francisco at $1.25 million, and then Maui County, of course, that's in Hawaii, clocking in at $950,000. Rough. I think for me, I would never buy in any of these cities. If it were, I'm looking at this. Macon, Georgia, okay, I can kind of see that-ish, but I'm not really buying in Macon. I don't know why. I'm going to go and check it out. And then Baltimore, Maryland. We were just there in Baltimore. A lot of great buys in Baltimore as well. Detroit, Michigan. Interesting. All right, so I might have to consider Baltimore. I might have to also consider Detroit. But I can't consider any of these cities unless I at least take a look at Macon, Georgia first. All right. How much home staging can pay off for sellers? You want to know? Here's the answer. The answer, in quotations, is heck yes. And this is coming from Realtor.com. Heck yes is the answer to this specific question. And this is according to an overwhelming number of buyers agents polled for a recent NAR report, National Association of Realtors report. About 40% of the agents that were surveyed in this report said that the staging of a home had an impact on most buyers, while 52% of realtors said that it affected at least some of the folks interested in the home. This report was based on a survey of more than 2,000 buyers and sellers agents. So really interesting. I think it was last week that we just talked about if you take amazing pictures of your home, you can get a pretty decent premium. So what kind of staging can pay off? Obviously, bathrooms, bedrooms, kitchen. The sellers are overlooking the guest bedrooms, though, so that's kind of interesting as well, as they seemed that they were the least important. Guest bedrooms, very interesting. All right, and then, of course, how much can home staging pay off? You want to look at a percentage point. Here it is. Depending on how much you spend on staging, you can get an extra 5 to 7, 8 10% more on the price of your home. Very, very interesting. Today's podcast is brought to you by Renters Warehouse, one of the largest, fastest growing, and highest reviewed property management companies in America. You want to check them out? Go to renterswarehouse.com. We've talked a lot on the show today. Had a great conversation with Jeff Levin about lending and, of course, his new book. And he's always on the go, so if you want to get in touch with Jeff, you know how to do it. We talked about the current state of where the market is, the real estate market is, but make sure that you take a look at your local neighborhoods and really understand what those numbers mean for you before you purchase any properties. We also talked about the least and most affordable housing market. And, of course, does home staging pay off? I'll let you be the judge, but I think so. That's the show. Got any questions? Head on over to thinkrealty.com. We also have a magazine called Think Realty Magazine. You can pick it up in Barnes & Noble nationwide. Until next time, happy investing.